G'day and welcome to this week's video. This week I'm going to touch on active asset management compared to passive asset management. So just a quick explanation. Active management is where there'll be a fund manager or an investor that is actively looking for sectors and businesses that will do well or do better than what the average will do over the time. So a good example of a passive investment is a ETF or an index fund where they will just purchase, say, the ASX 200. They'll just buy the top 200 companies from top to bottom, and obviously it requires no research. They just buy the top 200 in the correct weightings, and they've mirrored the index. So less the small fees they pay, you know that you'll get a known outcome of what the index done. So the benchmark. Now in Australia, we've got two big resources stocks, and we've got four very big banks. They make up a considerable amount. It's not far off half of the entire market. So that's really in the top 6 or 7 stocks by market capitalisation are made up in those businesses. Now, what I thought I'd do today is I'm not an advocate for passive management. I prefer to take more of an active approach and look for sectors sectors that may have issues and you don't want to be in, and sectors that may have tailwinds and you may want to be in. So I thought I'd do an example, and look, these examples are always good in hindsight, but it just shows the difference that if you were a passive investor and you had to invest in the example, that's BHP, over the last 5 years, if it's number 2 on the market capitalisation of the Aussie market. There's Commonwealth Bank at about 128 billion, and BHP is about 126 billion. These are huge companies and make up a huge part of our index. So back in 10th of the 10th, 2011, so BHP was trading at around I think it was 37 and 10 cents. Its earnings was I think $3.69 per share, and they paid a dividend of 91 cents. And debt around that same time was not too bad. It was a bit under 15 bill total debt. Now, if we want to wind the clock forward a little bit, we know that BHP share price yesterday got to 23.10. We know that earnings per share has come down, and it's forecast to come down further to $3.22. And obviously dividends, as we know, was well publicised that they were cut substantially and down to 40 cents. And debt itself has gone up considerably to about 48.8 bill. So this is significantly looking a different business to what it was 5 years ago. We were aware of the China issues and the effect that could have on this type of supply and demand commodity-driven business. They can't control what they get. So over time, we've been big holders of BHP for our clients in the past, but we've slowly sold out over time. As an alternative, looking at a business that I follow very well, it's Magellan Financial Group, very strong business. If we then start to compare 5 years from Magellan, it was trading at $1.28. This is back on the 10th of the 10th, 2011. It had earnings per share of 4 cents and was paying a dividend of 1 cent. So that's what it looked like on the 10th of the 10th, 2011, and it actually had nil debt, so no debt at all. How does it look now? It looks considerably different. The share price was $1.28. It's now just over $22. Earnings per share $1.24, and dividends I think around 89 cents per share, and still no debt whatsoever. So, and this is very much a smaller company. We've spoken about in the past, is blue chip always the best way to go, or what is a blue chip? Just because it's been fantastic and it's a big business doesn't mean it will be fantastic for the next 20 years as it was the previous. So avoiding sectors that may have some strong headwinds, and finding sectors and businesses that are growing, particularly funding their way with no debt, is a highly that's what we're chasing when it comes to investing. So look, if you'd like to know more, there's quite a few resources down below on self-managed super funds and also paying down your home loans as quickly as possible. You can subscribe, get an ebook and watch some further videos. If you like this video, give us a thumbs up. And just for fun, I got myself some a beehive last week. I just got the bees and I was out working around where the beehive was, and I used my iPhone and I took a quick video in slow motion, which I thought was pretty cool. It's only a 40-second video. So I'll just tack this on the end of this video only for fun. If you would like to see any more bee videos like that, or how it's going, give us a thumbs up, and if I see a few thumbs up, then I'll do something else just for fun. Good to have hobbies. Anyhow, thanks for listening, and we'll see you next week.